Before we get started, we'd like to thank EMC Bond for sponsoring this episode of Let's Get Surety. EMC Bond prioritizes personalized service in every aspect of their business. When you partner with them, you'll receive stable, responsive, and timely solutions rooted in strong relationships. To learn more about EMC Bond, their products, services, and personalized approach, visit emcinsurance.com/bond. Now, on to our show.
You're listening to Let's Get Surety. Let me hear your bonding talk with Kat Shamapande.
Hey everyone, it's Kat Shamapande. Thanks so much for joining me for this episode of Let's Get Surety. I've got with me today my co-host, Mark McCallum, CEO of NESBP. Hey, Mark.
Hi, Kat.
Thanks for being on again.
Glad to be back and to be with a special guest.
I am very excited about our special
Actually,
guest.
a return guest.
That's true. He's come back to join us again, so it
yeah.
couldn't have been too bad the first time.
No, it was great.
Yeah.
So we've got Ryan Work. He's president and CEO of the Surety and Fidelity Association of America, or SFAA.
Well, great.
Yeah.
Yeah. Well,
Thanks for being on.
Thanks so much for having me. This is great. Yeah.
We're glad to have you back again with us, Ryan. And it's exciting to talk about how NESBP and SFAA collaborate.
Just in case there is a surety company out there that doesn't know who SFAA is,
Fill 'em
could you
in,
just
yeah.
give us like a, your elevator speech on SFAA?
Well, the SFA is largely a great counterpart with NASBP, and we,
Right.
we represent the surety industry and all the almost 96% of sureties in the country, and we write, collectively, and we'll talk about the data, but a vast majority of everything going on within the industry, and it's growing. We'll talk more about that, but it's an exciting time to be here.
Exciting time to be in
yeah.
surety.
It is. And you were very kind to come to our annual meeting, and we greatly appreciate
Of course,
that.
yeah.
Yeah.
Just one
We're
of the
here
many
now
things.
at NESBP's annual meeting
Yeah.
in Colorado Springs at the beautiful Broadmoor
Beautiful.
Hotel. Mid-May. It's a bit chilly, but still wonderful to be here. And it's great to have you here with us.
Yeah, Colorado weather, because it was sunny. Now it's not. and
It
it's
may
a
snow
little
tomorrow.
chilly.
It's going to
Yeah.
be fine.
Yeah,
That's why you need
Yeah,
partnerships like this for the uncertainty
That's
that's
right.
out there, right?
That's right.
Right, and so we have a long-standing partnership, a very valued partnership. For many decades now, and certainly, I think one of the premier events of that partnership we enjoyed not that long ago, at the end of February. So we had a joint legislative fly-in, which was our most attended event ever,
Right.
which was very exciting. And we combine it with, I call it the Washington program on the front end, and then we have the congressional visits. But maybe tell us a little bit about the Washington program, if you would.
Well, I think it's great because it's one of the unique times throughout the year that our members get to join together and really advocate for the industry collectively.
Yeah.
And Mark, as you said, every year we continue to grow, and I think we had almost 180 meetings this year.
That's amazing,
160 to
isn't it?
180.
Yeah.
And I think it just shows the value that provides, because advocacy is a big part of both of our associations.
Yeah.
Huge.
And
yeah.
when we come together, we're making a bigger impact. And I say this a lot, is that your worst enemy is a policymaker who doesn't understand your issues.
Yes.
And with all the congressional turnover, it's really important for us to go in because our members are the best advocates for the industry out there. They know it inside and out. And these members of Congress and their staff, they deal with hundreds of issues every day. And it's great for our members to go in unified to talk about not only educating them about the industry and what we do for taxpayers and the federal and state governments, but just educating them and then also advocating for pieces like WIFIA that are going to help move all of us forward and probably create a lot more opportunities for us.
Right.
Well, and we both have GR teams that are out there working on the Hill, but it means so much more when it's coming from their constituents, doesn't it?
Absolutely. Lobbyists are very important.
They are,
and members
yeah.
and staff lean on them a lot. But I think the most important story that you have is when you have members from districts and states that go in and say, hey, look, this is what we're doing on the ground. This is what we're saving taxpayers. And I think one of the critical pieces we have now is these state data sheets that we did outside of our EY study, but we can literally go deep down and basically tell members of Congress exactly how much taxpayer money is being saved on federal projects based on the EY data. And in states like Texas, that's $270, $300 million a year. And if you're a policymaker, that's that's a real thing when it
Yeah.
comes to taxpayer money and appropriations and things like that.
Well, and with that data, you're able to bring it home to them and how it's
Absolutely.
affecting their constituents in their state.
And those stories are so important. We can talk about ethereal policy, but when you talk about that, I think it really, to your point, Cap, really brings it home to them, right?
Yeah.
And I think the other important part of that is it's just not education. We got so many more co-sponsors on the WIFIA bill because of our members going
Right.
in. There's a great story. I heard one of our members went in to meet with Senator Shapiro from Pennsylvania. They got to meet with him personally. Well, he got on that bill just a couple weeks later. So
That's amazing.
it's things like that I think our members go home and it's great conversation. But I think they really feel that they make a difference, and
Yeah.
they do. It's
And
a
they do,
real
right.
it's a real thing.
Well, yeah, you're illustrating how it's
Yeah.
real change that's happening because of their work on
Yeah.
the Hill.
And the thing is, every week in DC, as you know, Mark, there's other fly-ins, and it's important for us to have that time
Right.
in the Capitol, to have our time there to talk about what we're doing.
Right, and we have, I'd like to say we always have a succinct, unified agenda for the members to go up there and advocate and give their points across. I know not everybody may be comfortable in being a quote advocate, even though I believe, I'm sure you believe, that one, they're giving context and they're prepared. I think both organizations, separately and together, do a lot of education of their members to be an effective advocate. And then on the front end, there's an orientation program that's virtual, that's done ahead of time. The Washington program with speakers kind of contextualizes the value of their presence being there. And then you provided some incredible materials with those state data sheets that concretely explain the value of surety bonding in that state. So those are powerful tools for anybody who wants to advocate on behalf of their career and their industry to go up there and be effective. And to remember, they're the subject matter expert. So they're meeting with a staffer who
knows nothing about surety.
Doesn't know anything about surety, and is looking at them as being the subject matter expert who's going to educate them on what surety is.
Yeah.
And the other thing that, and it really struck me this year, is that we both have committees, we have our boards, and those are largely the folks that are out there as the faces of our industry. But I've also seen the fly-in get younger and younger, which is great because we're bringing more people in, and at least on our end, more sureties are actually sending some of their other teams as almost a reward to be like, hey, you guys know what you're talking about. This is your opportunity to go in and represent the industry. And I really like that. It's really important too. And it points to the future of building and mentoring and giving them opportunities. And that's one thing that I've really seen over the course of the last couple of years.
So maybe not everybody who's listening on the podcast is familiar with your background, how you used to be on the Hill.
I was on the other side of that. That's right. Yeah.
Right, and that you were chief of staff up there. And maybe explain a little bit more about the value of data in that advocacy, like the credibility that it brings if you're on the other side, and why that's so important.
Yeah, I mean, so I spent 12 years on the Hill in leadership and committee offices, and that's a good point, because I think one of the things we do through the Washington program is educate our members about what to expect and the fact that they are the subject matter experts.
Right.
And when I was on the other side of that equation and the Speaker's office and Ways and Means, while it's fine to go in and talk and argue about policy, it's another to back that up with data.
Right.
And not a lot of people have the data that we have, and that's very unique, and it's a powerful tool that there's a lot of other industries that don't have that. They go in and they say, hey, look, this policy's great. We don't have really data on it, but just listen to the fact that it's really good. And we have data, and we have stories to tell about claims and highway projects and commercial bonding and everything, the whole spectrum of what's going on. And that's very critical to what we do.
So as an organization, SFA is a little unique. Why is it that you have this data? Maybe tell us a little bit.
We're very
how
unique
that came
from a
into being.
trade association perspective because, I view us as, we have a couple of key pillars. It's education, it's advocacy, and it's the data. And we're very fortunate because we have a long history of this, over 100 years. And we're basically a self-regulatory organization, but we're a statistical provider. So we're doing the state filings with all the insurance regulators throughout the country. That provides us a unique ability to collect that data from members, do data calls, and then that provides us a much deeper snapshot of what's going on within the industry, right?
Right.
Not only on the surety side, but on the fidelity side, and even deep diving, in states and regions and what's going on with premium, what's going on with loss ratios, kind of all the various aspects of surety and fidelity.
That's a great segue to a particular very important report that comes out on a regular basis, and that I think recently came out. Why don't you tell us a little bit about that?
Yeah,
what it is, and then maybe we can get into the details.
Yeah, so this is really opportune because last week we actually came out with our 2025 data.
Okay.
And what it really showed, if you don't mind me kind of walking through that,
please.
and kind of go. So, the great thing is we continue a great growth trend in the surety industry. So last year in 2025, there was about $11.6 billion in direct written premium.
Wow.
That was almost $1 billion. It was an 8.8% growth over 2024. Wow. And while it's not the highest growth rate we have, I've told people, when you get up to $11.6 billion, your growth rate is going to shrink a little bit when you're growing by $1 billion. But I think that shows the capacity in the marketplace and the role that we all play, both in NASBP and SFA, to make that happen together.
Yeah. Right.
So the great thing is that growth continues, and there's been a lot of headwinds, and we can talk more about that. So I think diving deeper into it, we had our loss ratio ticked up about 1.2% to about 24.7. There were heavy losses in the fourth quarter because of some large claims.
Right.
But the loss ratio quarter over quarter in 2025 really was up and down. I mean, I think our third quarter loss ratio was somewhere around 13 or 14%. And so it's a roller coaster ride, but the overall loss ratio ticked up. And I think direct losses were about $2.7 billion.
Okay.
And the interesting thing, if you look at that historically, that's the highest loss since, I think, 2001.
Really?
But at that point, in 2001, the industry was only $3.6 billion. And so it's very different.
Yeah.
So the percentage of that versus the written premium is much lower historically than the last time it was very high in 2001, which that loss, if you calculated that direct written premium versus loss, that was about 86%.
Okay.
And now it's very low historically still.
And doesn't it make some sense that it might tick up a little bit given the economic volatility in the latter half of 2025?
All of that. I mean, we had some large claims, as we all know. I mean, I think there's just a lot of different headwinds. There were tariffs, which we're going to see in the Q1 numbers. Government shutdown, which we still have to see. But I think last year was a combination of tariffs. It was supply issues. The cost of those supplies and energy, and then also I think ongoing workforce issues. And that's going to continue, I think, throughout 2026.
Right.
I don't want to say throughout, but I think we're still seeing the tail of that, if you will.
But given that context, it's still pretty amazing, the performance of the industry. And it's also showing, I think, the disciplined nature of the industry as well, as they're navigating that, and they're still doing quite well.
Well, I think it shows the resiliency. And I think the fact that there's still opportunities out there. And, and commercial has grown, contract continues to grow. One of the things I wanted to mention as we look at where this year and the future lies with that growth rate is that Congress, actually the House Transportation Infrastructure Committee this week, is considering a $580 billion surface transportation bill, which is the biggest in history. And that's long term, and it may take a while to get through. I mean, the House will probably take it up in the next couple of weeks. The Senate, no one knows. We'll see, maybe by early next year. But the fact is that's coming. And that's going to be a $580 billion influx of funding to critical transportation, not only rail and transit, but more importantly, bridges, highways that are going to have ripple effects for years to come.
And that was done under the leadership of Chairman Graves.
And Chairman Graves was our speaker at our Washington fly-in, and he's retiring, and I think this is one of the things he's committed to getting done before he leaves office. But just like we always have these transportation bills, and they provide all that opportunity, and this one is particularly big. It will be if it goes through the way it is, will be the biggest influx of federal transportation funding we've actually ever seen.
And I just want to circle back to that for a little bit. So, I know he's retiring, but I think it's important for people to understand that he understands the surety industry's perspectives. I mean, he was a speaker both NESPP, SFAA have had wonderful relationships with his office. And that's the kind of thing that's so important as an industry to position ourselves to be in that equation. And so when these very important bills come up, that we're understood and heard and planned for in those appropriations bills.
Yeah, because I think we've done a great job of building that relationship over the years. I know he's retiring, but the fact is he's still the leader of making some of the most critical policy and funding decisions that matter to us. And he's leaving a legacy that shows that.
Right.
Yeah.
And while Surety is not his top 10 issue, because he's dealing with
a lot.
aviation safety and all of this, him and his staff understand that we play a critical part, especially in protecting the taxpayer funding that is, by the way, that's what's funding the $580 billion.
Pretty precious, right?
Pretty precious. And we're a critical safeguard in that. And Sam really understands that. And I think our next, it's not a challenge, but I think part of what the fly-in is really good at is it's identifying the future leaders of the committees that are critical to us and making sure that we're getting in there early and often. So when those people do come up to leadership or in a position to really help us, that they already have years of understanding about what that means.
Right, and maybe talk also about the value of just being understood as a resource. So if a question comes up in a congressional office, they know maybe a contact to ask.
Yeah, I think that's what's important is that they know who we are because they do have questions. 2 weeks ago, we got a question from a House member about claims and how we operate if there's a large infrastructure project that may go awry, and we're able to not only show the data but provide examples of times where we've had to step in as a surety and make something right. So
you earlier alluded to the EY study. Now something's going on with that, correct? Because that was a very important to the joint fly-in, and it's a very important piece for the industry's advocacy. So maybe give us a sneak peek on what's planned for. Yeah,
the critical part of the EY study is to show the value of bonding, right? And the first EY study was done 5 or 6 years ago. And as SFA and our board were meeting last year, we decided, hey, that while that data is great, the industry and everything else is moving at a fast pace.
Yeah.
And now it's time to take another look at that to make sure that value remains, or if things have changed, because that was done right after COVID, and COVID changed the landscape quite a bit.
Yeah.
Made things weird, right?
Just a little bit, right, Mark? And so I think this 5-year mark is a perfect time to revisit that, because while 4 or 5-year-old data is fine, I want to make sure, and we want to make sure, that what we're providing policymakers, regulators, and even contractors and folks who are buying surety, that this makes a difference. So we've spent the last 8 months with EY. They've done literally sat down with contractors and subcontractors, talked to them, done one-on-one interviews, collected all that data, and they're in the final phases of that. And we have our own annual meeting just in a couple weeks in the middle of June.
Which I look forward to attending.
Exactly, correct. Yeah. And so we're basically going to present all those new findings at our June meeting. And right now, my understanding in the preliminary phase is that the value that we've been talking about for a long time, and especially over the past 5 years since that first report, it still remains. There's certainly economic factors. There are changes, but we want those. We want to identify those changes, because what we don't want is to update that study every 5 years and find the same thing. That's not how the market works. And we all know it's changed. And the good thing is if assuming we keep updating that moving forward, we can compare apples to apples during that time period and see exactly how the industry is moving, right?
With that consistent
and I think that's really important. So
data,
while I think that first report was groundbreaking, right now we can take that and then have a really good historical perspective about where the industry is going, and also then combine that with our own data to make sure that we're going in the right direction, or what changes are happening. Because right now we're growing. That's not always going to, I would love for that to happen, but it's not always going to be the case. There are going to be bumps in the road. There's going to be things like COVID. 2001
Right.
was bad for a number of reasons.
Yeah.
There's economic factors.
Yes. Dare I say the R word? Like, would we ever get into a recession?
Correct.
Who knows? But
Yeah.
But the good thing, especially in Surety, and if you want to talk about infrastructure, and there's all this influx of federal money. I mean, that's scary because you don't know when that funding's going to be there.
Right.
But the
Correct.
fact is, our nation is dependent on a vast amount of infrastructure, and that's always going to have to be modernized and equipped to handle where we're going. And the type of infrastructure may change, but our role in bonding that is
Right.
not going to.
Right.
We just
Right.
have to find new opportunities about what that infrastructure looks like. And that's just on the contract side.
Yeah.
Yeah, I mean, I think a great illustration of an effort, a great effort that I think produced some real important information and came up with a kit was the bead bond kit, right? But then things changed, right? And now maybe it's going to get ramped up, and so you never know what to expect. But now the industry has given some guidance when it does ramp up, and I think it is starting to right now. I think they're releasing the funds. What is it, like 22 billion?
Yeah.
Something like that.
It's not a small number.
Yeah, not a small number.
just 22 billion. I mean, it's not 580 billion, but we're getting there.
Right. But we couldn't have predicted kind of the change in how it was being perceived.
Right.
And that they were going to go through another process to think about that program. But we're in position now because we did all that legwork.
We did all the legwork, right?
Yeah.
And I think the broadband is a perfect example of the fact that things change. And 10 years ago, people may not have even thought that money would be available to broadband. And now data centers are a hot topic, and a very strange topic at that. But,
They are.
But that's the big, almost like a monster in the room when it comes to some of those, I'll say building projects. But that's only going to be going on for so long, and then that will move on to something else that we may not even know about, right?
Right.
Yeah.
And AI is driving obviously a lot of that. And you guys had a great panel discussion this morning on the role AI plays in the surety world, right?
Right.
And it's fascinating, and that conversation is going to happen a long time. And when we revisit this in 5 or 10 years, we're still going to be talking about AI. So
In a totally different way, I'm sure,
different
right?
way.
I'm sure it'll just be a robot here talking to you at that point.
He may also be a robot at that point.
Yeah.
Well, Ryan, it's been great having you on, kind of sharing those numbers. I can't wait for June to hear the numbers in the EY study. Looking forward to that. Maybe we'll get you back again once those are
be great.
released, and we can talk through that some more.
Well, I appreciate it. Kat and Mark, thanks so much
Yeah,
for having
thank
me.
you.
Yeah.
You've been listening to Let's Get Surety, brought to you by the National Association of Surety Bond Producers. For more information about the NASBP and its members, visit nasbp.org.
Before we go, we just wanted to thank EMC Bond again for their generous support in sponsoring this episode of Let's Get Surety. EMC Bond prioritizes personalized service in every aspect of their business. When you partner with them, you'll receive stable, responsive, and timely solutions rooted in strong relationships. To learn more about EMC Bond, their products, services, and personalized approach, visit emcinsurance.com/bond.